I think that if you're actually an individual, you're using Bitcoin right now, you're one of the early pioneers. If you keep it, you'll be insanely rich. If you take money off the top or you sell it, then you'll remember that you used to have billions of dollars of Bitcoin, but you sold it for Ferrari, and that will be unfortunate. But and so I think that there'll be some OGs that will still be heavily engaged. But I think ultimately, Base Network is going to have 10 to 100,000 big financial institutions that are going to be settling large amounts. Every company, look, every family on Earth should adopt the Bitcoin standard. What is that, 1 billion families?
Yeah.
Every person on Earth should adopt the Bitcoin standard.
One of the world's most powerful Bitcoin advocates and CEO of MicroStrategy, Michael Saylor, just issued a chilling warning. Forget price pumps and hype cycles. Saylor sees a critical crossroads approaching that could leave unprepared investors stranded. His message? Act decisively now or watch history's greatest wealth transfer accelerate without you. According to Saylor, Bitcoin isn't digital cash for buying your coffee. It's the digital capital. Think of it like prime New York real estate or Picasso paintings, a long-term store of immense value. Trying to force Bitcoin into the role of everyday currency is a fundamental mistake. We need fast, elastic currencies like dollar stablecoins for daily transactions. At the same time, Bitcoin serves as the bedrock, the savings account, for the next century. Confusing these two functions is dangerous, Saylor warns. He issues a stark prediction. The era of weak fiat currencies is coming to an end. Currencies inflating at 14%, 30%, or even 7% annually are living on borrowed time. Global demand is overwhelmingly for US dollar stablecoins, not Egyptian pounds or Nigerian naira. Saylor predicts a massive shift. Weak currencies face being completely marginalized as capital floods into dollar-pegged stablecoins and, crucially, seeks the ultimate store of value, Bitcoin. The dollar's dominance grows, but Bitcoin becomes the indispensable reserve asset underpinning it all. Ignore this shift, Saylor warns, and you're not just behind, you're locked out. Now let's watch clips from Michael Saylor's interview to gain more insight. Please don't forget to like, subscribe, and enable notifications for more in-depth content. Thanks for joining us again. Enjoy the rest of the video.
I think in the modern world, the best conception of money is that money has a medium of exchange component and it has a store of value component, and you have a unit of account for the store of value and a unit of account for the medium of exchange. So the right metaphor is just think of the dollar versus BTC, or checking account versus savings account. And so you're going to have sort of high speed dollar type instruments to price things in day to day. And then you're going to have another capital asset that you're going to use to store your value over the course of 100 years. Like, I don't run a country, so no one's asking me, but I think it would be a mistake to try to establish a currency with a capital asset. For example, you don't really want to price all your sandwiches in New York City real estate. Nor do you want to price your sandwiches in ounces of gold, nor do you want to price sandwiches in Picasso paintings. I think that you've got capital and you've got currency. Bitcoin is capital. It's digital capital. It's not digital currency. I think a stable coin, the dollar, is digital currency, like Tether. And you've got weak currencies and strong currencies. And a weak currency is the Bolivar or the Naira, like something which is inflating at 14% a year or 30% a year. I think you've got strong currencies that are inflating at 7% a year. And then you've got capital, which is not inflating at all. Bitcoin is capital. It's not a strong currency. It's not a weak currency. It's a capital asset. I think that that you have a few currencies that are kind of pegged to the dollar that are struggling on, and I think you have a lot of currencies that are collapsing against the dollar. And then you have the dollar. And so if the stable coins succeed, and they're going to succeed, If the U.S. Passes the Genius Bill, and then U.S. corporations and banks are able to issue stable coins backed by U.S. dollars, then that market's going to go from 250 billion to a trillion to 2 trillion to 4 trillion to 10 trillion. And you have to ask the question, who's going to be buying it? And the answer is people that might have otherwise had rubles or CNY or every African currency and every South American currency. So I think the weak currencies of the world are going to gradually be marginalized. I think that the dollar will grow. I think weaker currencies will be marginalized. I think that there are 400 million companies in the world, and there's 40,000 big banks in the world. So I think that, and of course there are lots of institutions. So I think that as Bitcoin is integrated into the fabric of the global economy, I think you'll see how about 1,000 banks that are actually trading peer-to-peer with each other. I think that the banks, the custodians, megacorps, I see a world where every major bank and every major tech corp, maybe a Google and an Apple and a Microsoft, they're all settling or moving large amounts of Bitcoin around on the base layer. Governments, you would think that the biggest users of the base layer would be Apple and Google and the US and Bank of China and Bank of Russia and Bank of England. To the extent that any of those things exist, right? If the nation exists, if the bank exists, you would think that Citi would be moving billions of dollars of Bitcoin to B of A, to Wells Fargo, to Santander, to Deutsche Bank, to Swiss Bank, to Bank of Japan. I would think that Microsoft will move billions and tens of billions of Bitcoin between Microsoft and Google in order to work through some, technical issue. I think I think Visa and any of the payment networks, they'll have massive amounts of Bitcoin. So I think that if you're actually an individual and you're using Bitcoin right now, you're one of the early pioneers. If you keep it, you'll be insanely rich. If you take money off the top or you sell it, then you'll remember that you used to have billions of dollars of Bitcoin, but you sold it for Ferrari, and that will be unfortunate. But and so I think that there'll be some OGs that will still be heavily engaged. But I think ultimately, the base network is going to have 10 to 100,000 big financial institutions that are going to be settling large amounts. And I think the network's going to scale in the layer 2s and the layer 3s. I think the Lightning network is going to end up being a high speed, high frequency, lower value settlement network that will stitch together 100,000 or 1 million websites or 1 million mobile apps. Or you could imagine everybody with a mobile app that has payments built in. At some point, they might go peer-to-peer. They won't do it on the base layer. They'll do it on an open protocol layer 2, most likely. And then there'll be like massive competition between Coinbase and Cash App and all the traders and the banks and the high frequency, traders and the next person running MasterCard or Visa, and they'll try to create these layer 3s. Mm-hmm. And they'll have a layer 3 protocol, and maybe Binance wants you to move it on Binance, and Visa wants you to move it on Visa, and Coinbase wants you to use their network, and Cash App, and then Microsoft and Apple Pay and all these other tech networks, they'll be layer 3s. And if 1 billion people trust Apple, with their credit card, maybe 1 billion people will trust $10,000 worth of Bitcoin to Apple. And then maybe there'll be some successor to Apple, right? Like Tesla bot or something. So I think that there'll be a huge amount of transactions, billions and billions of transactions a day, probably billions an hour on the layer 3s, probably billions a day on the layer 2s. And then you're going to have the same number of transactions, on on the layer one, far fewer. And those will be $100 million, $1 billion type settlements, between the mega institutions. And I think you'll probably see Bitcoin security and Bitcoin credit type ideas built into a lot of financial and technical applications. And there'll be new applications, new use cases that we can't even conceive of right now that will maybe for cybersecurity or social security or something else that will grease the wheels of digital commerce.
Saylor delivers a stark message to current holders. If you're actually an individual and you're using Bitcoin right now, you're one of the early pioneers. He emphasizes the unprecedented opportunity. If you keep it, you'll be insanely rich. The downside? Selling early for fleeting luxuries, let's say a Ferrari, will be a source of profound regret. This isn't just about holding, it's about recognizing the seismic shift in global capital allocation happening now. The key mechanism driving this shift? Bitcoin treasury companies. Saylor passionately argues that this is the most underappreciated and explosive trend. These traditional public companies like his MicroStrategy and Metaplanet are the only bridge allowing the vast pools of institutional capital, trillions mandated for equities and credit, to flow into Bitcoin. Pension funds and retirement accounts can't buy Bitcoin directly, but they can invest in a company that holds Bitcoin. This creates massive, sustained buying pressure. Saylor views the recapitalization of the global equity and credit markets, with hundreds of trillions of dollars, shifting onto a Bitcoin standard as the dominant force driving adoption and price appreciation in the near term. Missing out on this wave, either as an investor in these companies or as an individual holder, is the second critical danger he highlights. Let's watch clips from Michael Saylor's interview to gain more insights.
I think the most exciting thing going on right now is the issuance of BTC-backed equity and the issuance of BTC-backed credit. Because, you're talking about $100 trillion of equity and credit that's discretionary. So if I were to say every public company should recapitalize on Bitcoin, that would be a start, but that would be an understatement. Because I didn't include the 400 million private companies, did I? And I didn't include every institutional holder of any capital. So I think that that's a very powerful dynamic. And once that starts, that burns 100 million a week per company, a billion, that can burn billions, and that could be billions of dollars a week. And and the same with BTC-backed credit. If you look at all the credit instruments, all the preferred stocks, all of the fixed income, all the annuities, all the corporate bonds, all the high yield bonds, the junk bonds, all the investment grade bonds, all that huge amounts, it's all going to be recapitalized or reconstructed on a Bitcoin standard that's bigger than the equity. And so I think that there's a digital transformation of the capital markets going on right now. And it's profound. And what it means is a company like Metaplanet can go from being worth 10 million to being potentially worth 10 billion in a couple of years. So show me a better idea. How do you go from 10 million to 10 billion in 24 months or 36 months? It's not very common. So I really think that's the part that's underappreciated. I mean, people in the business staring at it. Like literally, most of the crypto OGs that have been in the business for 15 years are staring right at the thing and ignoring it or rejecting it as it's happening. Right? That's the irony to me. So, and I think that's because, again, their metaphor is they're looking for some technical widget to create instead of reconceiving the way that wealth is stored. If you're looking for the technical ideas are just harder. They take a lot more work. I mean, eventually you would think that Bitcoin is the basis for all payments, via something like the Lightning protocol. And so clearly the Internet of Money, that's a cool idea. It's a lot of work. It's going to take a while. And then I think Bitcoin is the basis of all identity and authentication. It's another interesting technical idea. Presumably, public-private key cryptography on a Bitcoin network, it ought to, it ought to replace most of the forms of authentication and identity and verification in the world. So I think that those are two technical dynamics that are operating. But on the other hand, if you launch 100 companies with those two ideas, 99 out of 100 are going to struggle, and one will achieve something maybe. Whereas I can take a dying hotel or a dying restaurant chain and I can make it worth $1 billion just using Bitcoin as digital capital. And on the margin, it's more likely to work than not. So I think that the really big compelling ideas are the monetary ideas, or the financialization of Bitcoin, the securitization of the network. I think the technical ideas will probably come later. They will come. They're coming. David Marcus is doing a great job, with Spark, and Light Spark. I think it's very interesting, and they're having good progress, and I think we'll see a lot more things like that. But those are a little bit more difficult to forecast because of the vagaries of technology entrepreneurship. Every company, every family on earth should adopt the Bitcoin standard, right? What is that, 1 billion families?
Yeah.
Every person on earth should adopt the Bitcoin standard. That's 8 billion people. Every company on earth should adopt the Bitcoin standard. That's 400 million companies. Now your next question is, well, is there anything I can do that's better than that? Well, there are a lot of other twists to it. If you take a private company, take it public, right? You add value. Now, all of these companies are competing to do something. The issue is, what's the something? And it depends on the company. So I think we're very early. I mean, not even 0.1% of companies are doing this, right? So, I mean, if you're less than 1% adoption, you're still pretty early. There's a lot of different business models you can pursue. If you're a private company and you're raising $10 million in order to fund operating losses, you could just raise 50 million and buy 40 million of Bitcoin and fund 10 million in operating losses. And I would definitely recommend that. That's better, right? Mm-hmm. Right. So every private company can do that. Now the question is, can you raise the money? Okay, well, it depends on who you are and whether or not we like your company and whether you're trustworthy. So this all becomes an exercise in capital raising.
So, what does this mean for you? Saylor offers blunt advice rooted in the two megatrends defining our era: digital intelligence, AI, and digital capital, Bitcoin. For career and wealth building, mastering AI isn't optional, it's existential. Use it relentlessly to amplify your productivity and create value. But financially, the imperative is clear: harness Bitcoin. Saylor said, "Find a way to raise capital. Find the cheapest cost of capital, the largest amount of capital, and convert it into Bitcoin." This means strategically using low-cost, long-term debt if available, and responsible for your situation or building businesses designed to accumulate Bitcoin on their balance sheets. The potential returns dwarf traditional investments. Paying off your mortgage is investing your money in a suppressed government credit instrument that pays 3 or 4%, he argues. Why would you invest in 3 or 4% if Bitcoin is returning 55% or more? Beyond investment strategy, Saylor reveals a profound, almost philosophical commitment. He reiterates his plan to never sell his Bitcoin, intending for his keys to essentially burn upon his death. Why? He sees delegating vast wealth posthumously as inherently risky, as funds could be misused, even against the principles he championed, like supporting efforts to destroy Bitcoin. Satoshi's example of inactive coins is cited. Lost coins are a contribution to everybody else. They make everybody else's coins more valuable. Saylor views permanently securing his Bitcoin within the network as the ultimate act of faith in the system he dedicated his life to promoting, ensuring his legacy directly strengthens Bitcoin forever. Now, this isn't just personal, it underscores his belief in Bitcoin's permanence and supremacy. Saylor's final warning is urgent. We are witnessing the rapid marginalization of weak fiat currencies. the explosive growth of Bitcoin as digital capital accessed through treasury companies, and the critical need for individuals to strategically acquire and hold Bitcoin using the most cost-effective capital possible. Passive adoption is already underway, as seen in Vanguard, becoming MicroStrategy's largest shareholder, despite its CEO's anti-Bitcoin stance. But relying solely on this trickle is a mistake. The pioneers acting decisively now, harnessing AI and strategically converting capital into Bitcoin, position themselves for generational wealth. Those who hesitate, sell early, or fail to grasp Bitcoin's role as the foundational digital capital risk are being left behind as the global financial system undergoes its most profound transformation in centuries. The time for decisive action is rapidly closing. Will you heed to Saylor's warning? Thank you for watching. Don't forget to like and subscribe.